Day. Good morning, everybody. This is Dennis Wilburn with from the Active Trend Traders. Mike Traegers joined us from Dallas, Texas. He'll be with us briefly today. Mike, how you doing?
Good morning, everyone. Yeah, sorry, I have to cut out in about 15 minutes or so.
And so, since that's the case, we're going to jump right into doing what we do. I want to remind everybody that all the materials that are presented are for training purposes only, and traders should always paper trade any new method prior to the risk of your own personal capital. And so Mike and I were talking on, as we were getting ready to come on, about just how well the market's been setting up for potential, just it's been so easy to trade and all that kind of stuff. I want to remind everybody, right, Mike?
Yeah.
I want to remind everybody that if you are a premium member of the Active Trend Traders, we do Wednesday training sessions. This Wednesday will be the third session in the candlestick reversal pattern. Session 2 was on the candlestick reversal patterns. This is a four training session, and then once we get done with this, we're going to go into using how to use Fibonacci's for to plan some of your trades, and I think you'll find that very interesting. Tomorrow, 8 o'clock in the morning, I will be at the Money Show presenting on the wealth building and income generation from index ETFs. If you happen to be just hanging around San Francisco at 8 o'clock tomorrow morning, hey, come by and see me. This is the Marriott at 780 Mission Street. So this week, we're having a really great low volume move higher from where we were last week. The S&P basically it did find lower support, and it is right back. It's almost had a 100% retracement of its move back to its resistance level. It has not shown the strength whatsoever of what the NASDAQ has done. The NASDAQ has broken out to a new high for the year, but what comes next? I'm going to be showing a slide at the very end. Most of you have seen it before, which will give you an indication of why the NASDAQ is behaving like it is today and why the others aren't. Russell is the weakest of the tracking indexes and is actually putting in a nice little reversal pattern today. That may lead to some good downside going into next week. We shall see. Outside influences. I want to remind everybody that while the market has had a really good rally over the past week, all the baggage is still there. And I just want to emphasize that.
Yeah,
yes,
that's for sure. That's for sure.
Greece was bailed out. So possibly they're off the radar screen for the next 3 years. China is, it is basically in a bear market and does not look, and even though the government has tried to prop up the market, at this point, that's had minimal effect. Janet Yellen yesterday came out and she was very hawkish on raising the interest rates this year. And while they're not going to raise them that much, I mean, Mike, what do you think they're going to raise them? 1/4%?
Yeah, initially the first raise will be 25 basis points,
yeah,
which is a quarter percent.
And one of the things with that is I think the Fed's got itself backed into a corner, and for bravado reasons, they sense that they have to raise the rates. And
well, yeah, they have to raise the rates. They've been talking about it and not doing it for too long. And if they don't raise the rates, they're going to lose even more credibility, assuming that they have any left. And they're telegraphing this so far in advance. My feeling is that when it finally happens, it will have absolutely no effect on the markets.
Okay. Yeah. So, what you think that's why they're doing it? Just because they don't. I mean, we're in the era of everybody's a winner and everybody gets a trophy, and everything has to be fair and square yeah, and all that kind of stuff. Do you think that's what they're doing it so they can try to avoid
Well,
machinations with the market?
there's a couple of things. They're telegraphing it so much that I think, there's the old saying about buy the rumor, sell the news, or sell the rumor, buy the news. Well, the rumor's out there. So when it actually happens, it's almost anticlimactic. That's one
Yeah,
thing. And another reason that I think they realize they have to do something is, they know that economic cycles happen, and that after every period of expansion, there's going to be a period of recession.
yeah,
There will be another recession coming along at some point in time, and if they don't have any cushion in terms of interest rate, being able to cut interest rates when things start going down again,
yeah, yeah.
and they have no cushion right now. They need to build that cushion, and they can only build it by raising rates. However slowly and gradually they want to do that, and I think they know that. I mean, we're closer to a recession than we've been since 2009, only as a factor of time having passed.
Yeah, yeah. And we know that the recovery has not been as strong. My wife and I were joking the other day, Mike. We were out at Costco shopping, and I was sharing with her that the inflation, right? Inflation has been tagged to zero, and this was a week ago. No inflation except in the things that you need to live, like gas, food, and all that kind of stuff. Anyway, you made an interesting statement to me earlier today about margin debt. I've shown a couple of slides over the past, couple of weeks showing that margin debt is significant, and that's one of the things that could, the rest of these are kind of overhangs to the existing other baggage that's the market's continuing to carry along with it right now. But you mentioned margin debt. You said that it was at a historic level.
Yeah, yes, it is.
But then you quantified that. You want to share with everybody?
Well, I was just looking at that this morning, and keep in mind that the margin debt numbers are they're released kind of late because it's a monthly update. So the numbers we have are a month or two old by the time we can look at them. And I was looking at this morning, and current margin debt for the NYSE in the United States is higher than it has ever been in history. Even adjusted for inflation, higher than it was before the crash and the big crash in 1929, higher than it was at the dot-com peak in 2000. And in fact, I think that the numerical value on margin debt right now, and keep in mind, inflation adjusted, is about 25% higher than it was in 2000.
Yeah.
And historically, again, peaks and troughs in the margin debt situation tend to lag peaks and troughs in the market index price levels by anywhere from maybe 2 to 6 months.
Okay.
But it's a heads up, and it's not a good timing. You're not going to do anything timing off of that. But something to be aware of. That we are we're in just unprecedented territory as far as that particular metric is concerned.
And so, and which which leads us to the concept of, because people have been buying, or institutions have been buying a lot of entities on margin, you get a tendency to get an overvaluation in the market. And then I think there's a correlation here between the overvaluation and the earnings reactions. The earnings reactions being so violent, as we saw, like with Google. Google went nuts, and of course Netflix. I don't know if Netflix has actually had. Yeah, they did have their earnings, and they gapped out dramatically. And the characteristic of Netflix gapping so severely to the upside, especially after a 7-to-1 stock split, is that's unusual. I'll just leave it at that.
Well, yeah, it's just sort of manic or kind of a frenzied reaction, and it just, the best word I can think of is unsustainable.
Yeah.
I mean, stocks just don't gap up 15-17% a day every day.
Yeah.
They just can't keep that up. I mean, Google today went from 600 to 695 in one day.
Why not?
Yeah, why not?
Anyway, taking a look at the percentage of stocks above the 20-day moving average on the NYSE. Here's where we were last week. We had just come out of this little trough. We were anticipating and hoping that we get something like we had back in October. And as you all know, that's not what we got. However, here's this week's, and I still threw in a little bit of last October. Isn't it interesting today? And again, this is the NYSE, tends to be a non-weighted index. And while the NASDAQ and NASDAQ Composite is busting out to new highs and just, looking like it's going gangbusters, the stocks that are, the other indices, if you will, are, and the stocks that are in them we're still getting a low participation rate. I mean, we basically, here was that line we've been watching now for weeks. And actually years, if you go back, and there's a couple other charts where you can find this same type of information. But as we see on this chart, the number of stocks that are above their 20-day moving average, even though the NASDAQ is breaking out to new highs, is still below. It just fell back below 50%. And so again, it seems like the tension is being coiled up and coiled up and coiled up and coiled up. Fewer stocks are participating in the larger rallies. I mean, when you can jump on a stock that if you pick the right one, like a Google or like a Netflix for their rebounds after earnings, that's awesome. However, the probability of finding one of those stocks is shrinking as the number of stocks above their 20-day moving average continues to shrink. In other words, your pool of high-performing stocks is getting smaller. And so we'll see where this takes us next week. Again, we're going to get in and look at the markets themselves. Any comments here, Mike, on this wonderful little chart?
No comments beyond what you've already indicated. It's unfortunate when things got a little bit oversold down to about the 20 level on this chart that we just didn't have a really good. We were looking for a good, on a daily chart, a good candlestick entry trigger, and we just never really got it.
Yeah.
And the only way to try to work around that or combat it when those situations arise is you sort of, at some point you take a plunge, and if you're in a mood to do so, you can jump in even as the market is falling, knowing that you're getting fairly oversold and things should turn around.
Yeah.
That's a very risky thing to do, but it's the only way this pull back to this extreme oversold situation a couple of weeks ago. It's the only way it could have been handled.
Yeah. And so, yeah, that's one of the things. And the thing about it is I do not like to fade trades. In other words, I don't like to pick up things when they're falling. I want to pick up things when they're bouncing. And on the charts on these, but on the indices on these particular ones, that, as you said, there was not a lot of good candlestick. Well, actually, there was very few candlestick reversal patterns. So here's a question. Mike sent me this beautiful chart earlier in the week, today, or was it yesterday? Sometime.
Oh, yeah.
You're always working, man, I tell you. And
I forgot about that one.
And this is 2003 here, 2009 here, and since 2009 bottom, does that look kind of steep? To me, it does, Mike. And you mentioned something about if a and again, I recognize the dimensions of the chart. If this was spread out a little bit, this would not be quite as steep, but still, that's that's a really significant trajectory because we went from below about, 1350, and now we're back up at 5,000 in, about 5.5 years, 6 years.
Yeah, I think actually the Nasdaq got down to about 1250 or so. It
Okay.
is now 4 times higher than that, which is a 300% increase in 6 years. And yeah, this chart is a little bit compressed, but it's also compressed going back to 03, and just the ascent and the rate of ascent on that, especially since 2012, 2013. Again, the best word that comes to my mind is unsustainable. Markets don't do that kind of thing unless they're in bubbles, and then at some point, those bubbles do get broken, and they can come back down pretty hard.
Yeah, a couple of things to note on this is on this chart is there was all these nice little flags as this was popping up, came back to a level of support, bounced, came back to a level of support, bounced. And so there was a lot of those, and you could see as it has continued to push higher, and it's continuing to push higher. But let's take a look at, let's give us some comparison. And again, this isn't going to be exactly the same, but look at this. This is a chart of the Dow, because there was no NASDAQ back in 1920. This is the move that the Dow made starting in about 1921, came up and then went hyperbolic. Whoops, how did I do that? Let's go back. There we go. It went hyperbolic until it topped out and then rolled over. And of course, this was the stock market crash of 1929. Just happened to happen in September, October timeframe. It was a Shemitah year.
This is a monthly chart, Dan?
This is a monthly chart. No,
okay. Yeah, it
yes.
looks like a monthly.
Yeah, it's a monthly. And kind of interesting. This was 1929. And the big thing is just take a look at the similarities. This rapid increase that just seemed to go on and on and on. And let me tell you, if you've read anything about the crash in 1929, up in this area here, people were just joyous, happy, wonderful, everything, free bubble up and rainbow stew kind of, thoughts. And for those of you who don't recognize that reference, that is a reference to a Merle Haggard song.
Yeah, history doesn't always repeat itself exactly, but it often does rhyme. And I think looking at these charts the way they're being presented, there's some pretty strong rhymes being put in here.
I really like that.
Seems to me.
This is 2000.
Yeah.
I mean, we went on a tear for about 9 years, significant, and then we flattened out and rolled over. But again, notice it's really, especially from I remember this well, from 1998, the acceleration just kicked in, and back in 1998, latter part of 98 into the 99, the commentators on CNBC, CNBC is the
financial channel.
Yeah,
CNBC.
And that's about all was there back then. And they all just were screaming, shouting, oh, this time it's different, it's wonderful, earnings, we don't need no stinking earnings. And you made a comment the other day, or you made a comment earlier today, Mike, about you were actually down at your Schwab dealer doing some stuff, and you heard somebody on CNBC speaking about Netflix. You want to just share that real quick?
Oh, yeah, they were, one of the talking heads on CNBC was, just talking about, Netflix, which had its big pop yesterday on earnings, and how he felt while Netflix might not be a good buy right now, if you already own it, you don't want to sell it because the future is looking bright for Netflix, even though it is currently valued at 65 times EBITDA. And if anybody doesn't know what EBITDA is, it's basically kind of a proxy for cash flow. I mean, a 65 multiple on EBITDA is just crazy. And to have a talking head recommending, the future appreciation in that stock from that kind of valuation level is just an indication to me of sort of a frenzy, at least as far as Netflix is concerned at
Yeah.
this point in time.
Yeah, and
It's crazy.
So
one last factoid. I do
Yeah.
have to go. I'm sorry, everybody. I'll just throw out one last little factoid that I'm aware of. And I think I may have mentioned it before. Going back 100 years in stock market history, which includes, the 1929 situation, there have only been 2 instances previously, and 1929 was one, and 2000 was another, where, the market, as represented by, the S&P 500 or the Dow, had 6-year runs of 200% or more. 200% meaning that it had tripled off of a low value, low reading. 2 instances in history of a triple in the indexes in a 6-year time frame. And the culmination of the first one was 1929. The culmination of the second one was 2000. The S&P 500 currently has a little bit more than tripled since 2009 over the last 6 years. The Russell certainly has more than tripled, and the NASDAQ has quadrupled. So I know that, a sample size of two prior examples is not, a very big sampling for statistical analysis, but there we are.
Yeah, a couple of comments just real quick. Joe just brings up that, we need to keep in mind that there's a massive increase in fiat money that sloshes around in the financial industry that, I basically think that means that they can take it and put it into whatever market they want to. And so that's what keeps sometimes things probably overly inflated because of that extra cash. And then the second question is, okay, yes, this can't be sustained. Anil says it can't be sustained, but what do we do now to protect our portfolio, to improve our portfolio performance, and keep things moving forward? And Anil, the big thing about it is, one, learn how to be patient, learn how to be persistent, learn how to be vigilant, again, to culminate the close, and recognize that you don't have to be in the market all the time. Sometimes with the volatility that's going on in the market right now, it's perfectly okay to be playing small ball rather than big ball, because look at it. When's typically the biggest return on investment on stocks is typically after we've come out of a significant, strong, oftentimes bearish market, and then things move higher from there. And then we pick off other winners as we go. And so I know for me, I'm playing small ball right now. I'll take a few profits but then just trying to position myself for both the potential downside. And that's one of the things why I came up with the strategy 3 that we use with the active trend traders, where I'm basically long both a call and a put in a leap, and then I'm selling premium against those each week. So it doesn't matter which way the market goes, I'm ready. So Mike, you bugging out?
Yeah, I have to go. I've already overstayed a few minutes.
Okay.
So hope everybody has a good weekend. I hope the information's been helpful, and we'll get together again next week.
Awesome. Thanks, Mike.
Okay. Thanks.
And so, okay, here's where we are as of 9 o'clock this morning. The Dow Jones Industrial was up about 1.26, a little bit, as you can see. For the week, it's gone up about 1.5%. The S&P's gone up about 2%. The NASDAQ, on the other hand, has gone up over 5% in the last 5 days since we took this picture down here on last Friday. And then the Russell up a little bit over 1%, about 1.3% above where it was Friday at this time. And so as we can see, NASDAQ is really tearing it and it's leading the way. So let's look at a couple of charts and we'll just get some specifics on that. Here's the S&P, both the daily on the left-hand side, the weekly on the right-hand side. It was basically the S&P is in the process of, here's 1, 2, 3. Could be potentially a triple top, and it could fall back away from this. This is what was kind of being anticipated with the NASDAQ and the composite, because it had a similar type formation, but as we know, it blew on past that. We will see what the different, indicators do. We've got the TSI approaching the top. We've got good momentum coming back up off the bottom, but now we're stalling. So we'll see what, transpires with this stall. Again, if it breaks out above this area, above the ultimate high of 2134, then the uptrend, the uptrend may take off on the S&P. We shall see. The weekly charts still, we're back up at the high, but the indicators are not. That is typically not a good sign for a up move. Momentum is still right about the 0 line on the S&P. Take a look at the NASDAQ. The NASDAQ is the one that has been everyone's friend. Another reason why the NASDAQ is up so dramatically is how it weights its stocks. We'll be taking a look at the end at the weighting of the NASDAQ. And as you can see, we get a breakout gap yesterday, a breakaway gap yesterday, and then another gap this morning. And this type of movement on an index is, I won't say rare, but it's, it is unusual. It is time to pay attention, because now we're just pushing up high. We have got about, with this new punch up, we are now on the NASDAQ, this is NASDAQ 100, only about 3.68% away from its all-time high, which was set back in 2000. Again, on the so what would I anticipate if this is starting a new uprun? This is not sustainable, so I'd be looking for a pullback to a retest down in this area, maybe the breakout area, or somewhere in this gap up here, which is a total level of support. And then we'll just wait and see what the what it's going to do. But if it pops up again and pops up again, then we're going to start getting into the zone of a basically an exhaustion type gap, and those tend to roll over, and when they fall typically pretty hard. The Russell is right now our weakest link. Those of you who are sat in on the, we get a move up above the 61.8% Fibonacci retracement. I'm going to get rid of that for a second. And yesterday we put in not quite a shooting star type formation, but it showed us where the sellers were on the Russell. Today we get a confirmation. Again, this would be a evening star formation if this candle here was a little bit higher, but we're selling back off at least to the 8-day moving average, and we'll see if this continues to turn over and continue to drop, or if we're going to settle out somewhere in here. We are within this range, and so anything from 1225 up to 1275, a 50-point range, appears to be within reason for a potential move on the Russell. And one of the things that I in watching the Russells, this is the weekly chart over here. 2 weeks ago, 3 weeks ago now, the whole moving average turned pink, and as you note, even as prices moved back up here and now have dropped back down. The Russell, the whole moving average, weekly moving average, has not turned to green yet. So we'll see if it closes above it or drops just below it by the end of the day. Right now, again, and if you'll recall last year with the Russell kind of followed its own path. It was more or less flat for the complete year, but there were several points in it that provided some really good trading opportunities, and we'll see it. And it's done the same thing this year. As you can see, here was the Russell last year, and basically each one of the corrections got a little bit bigger, but from the bottoms up to the tops provided some really good trading opportunities. So that's what we're at with the indices. Move ahead really quick. Just remember the active trend trader systems. We try to focus on 5 pillars of trading: IBD, growth stocks, and index ETFs. When to enter, when to exit, and what strategy to use and what to expect. We have honed down. Here's where we're sitting with regarding our investments year to date. We're looking at these to be moving up. Really, this week has been a good week to add to our for profits from some of the drops we had the week before. And we are focused now on 3 focal strategies attached to the active trend trading. One of the ones is the wealth and income generation. And what I like about this is this particular strategy, is strategy number 3, is that even when the market is going nuts, where there's not real good entries and exit, we can still use this strategy to generate both additional capital and income during the week, each and every week. And so right now we're generating about per trade about $238 per week in cash, which equates to about to 2.3% on. Right now I have 5 of these long contracts, the S&P January 17th 210 puts. I bought these back on April for $21, so I have about $10,500 invested up here, and so far we've returned at a rate of about 28.92%, so I'm right on track to hit my mark of paying for not only this position, but also an additional 90 to 100% of this investment. So strategy number 1, here was picks for the week. Short BIT, took the first 100 shares off for about a 5.6% profit. No simple options, we didn't do that. This week we picked up $626 on the strategy 3, and we've laid in $280 potential profit, potential cash flow for next week. We're waiting for a secondary setup on the early warnings ETF. So since we'll be recording this, but the majority of the folks who are listening to it live are already members of the active trend trading or the early warning alerts. If you are listening to this, we offer a good discount. Just go to this website here. So I want to show one more slide. Here, we've showed this slide before, why the NASDAQ gapped. Well, part of it is due to the weighting. And right now, Google is the number 3 weighted stock on the NASDAQ. And as you can see, 7.2%. Google was up really big today, and so that drove that up. Well, where is, I think Netflix is down here somewhere, maybe, or maybe not. But some of the other things on it, like Facebook. Facebook's been performing strongly here lately, but Apple's up nicely today too. So when these upper echelon are the first 20 stocks, if anything goes on really well in these, it can tend to exaggerate what the NASDAQ is doing compared to the other indices. So I wanted to highlight to everybody, I thought that Netflix was on here, but so We will see you guys next week. If you happen to be in San Francisco tomorrow, please stop in and say hi. And so until next week, keep growing the egg and trade wisely and trade profitably. God bless everybody. So, okay, I'm ready to look at some stocks. And Gino is already ready to look at some stocks. So, Gino, okay, BITA. Excuse me. There we go. Okay, BITA, let's see, we basically jumped into BITA on a short trade right about here and then it fell the next day down to our initial target, which was basically had been laid in place by this support over here. And we came close to that and we took out some of the profit at about 45.50-ish, but it did fall exactly 4 cents below our target. So if you were away from your computer, couldn't trade this one, and you just had your exit in place to close at 45.25, you would have been taken out with a nice little profit. BITA is looking weak. I've got a secondary target down here about the 43.34 level, which is a halfway point on this candle. If it blows past that, let's say it gaps down come Monday, and it's below this level, then that would become my new stop loss. Okay, let's see, AGN. Okay, AGN is in the process of doing a pullback. We had a kind of a cup with a double handle here. Here's a cup. I don't know if that had a big enough drop in price. Not quite. So this is more or less like a square box pattern. And then we broke out of that. Has earnings coming up here. And so let's see if it gets back down into this support level, which is somewhere about where its price action is right now, down to probably 310. We'll see if you get a rebound going into earnings, which are 8.6, 2015. Gino also has okay, Newlink. Yeah, Gino, I've been watching Newlink for a while. We get a really nice rebound here, and you can kind of look at this as being I'll call it a deformed kind of cup. It is coming up the right side now. We'll see if I get a handle place on it or not. It too has earnings coming up in first part of August. But this was a real nice move. Had some buying coming in on this little pressure up. And so a couple of things to look for is look for that. Let me get my pencil. Look for a potential pullback. Where could it pull back to? Well, of course, it's got support here. Oops. Show you where the support is. It's got support at this level here, and then it also has support at this level here. So be watching those for anything that pulls back into here and then watch for a small candle for a reversal signal off of that. Since I do not do naked shorts, what would be a good buy point for BITA? Is that, Lakshman, is that a buy point to go long the stock, or because there was also you could have done a August 50 put on that, and it gained about 25 or 30% within a day or two. Does that answer the question? Okay, cool. Yeah, and a matter of fact, I put that in the comments and information section on the when that alert went out. That specifically said, this would be it would simulate the being short the stock. Okay, FL Fleetmatics. What are we looking at here? Got a nice upward move today. Has not totally broken out of this level. Got earnings coming up on, again, about 3 weeks from now. We could be in a pre-earnings run. Just lay on it. It stuck its nose above the past level over here, which was up at 48.22. No. High. Where's my high? 49.18-ish. Stuck its nose above it, a couple of days ago, and then it's fallen back below it. Has not done a breakout yet. Volume is basically at average. You haven't got a spike on volume yet, and the momentum has not been growing, huge. So it may, like I said, it may be in a pre-earning run. It may pop above this, but I would be looking at this for potential. If you're interested in trading this, or you can designate that level there as a level of support. If it drops it, you can pick up a trade going back up through it. But that position should hold. And as you can see, it's tested down there a couple of times about the 47 level. So, okay, Gary, that's good to know that the BITA put worked out for you. Yeah, I got into them about 490 and took some off at about 610. So I was pleased with that particular trade. Let's see. Thompson. Okay, Thompson. Let's look at FireEye. FireEye has been a little bit, it wants to do something. What? Well, we've had this uptrend here, so that's still intact. And so it is playing around right here at the 50-day moving average, but we've got this level of resistance coming down here. And we're getting the moving averages kind of looking like spaghetti right now. And on low volume. So it's not selling off, but it isn't being bought either. So if you anticipate that this may go on to a pre-earnings run here shortly, then one could certainly look to buy it bouncing off the 50, or if it came back here and retested in the, down here about 46.50 would be another place to potentially get in, or, a break of this line here. But if it pulls its nose back down below this trend line, that would be telling you, this could be kind of weak. So let's take a look. Are you in this stock already? Okay. ABM. And depending on where you got into it, and because if you got into it over here, then you've got a nice profit built up in it. Okay, so you're kind of flat, so you maybe got in on the breakout around here. And so I would just watch it. As long as this level here, which goes back to this past support, stays intact, you can hang with the trade. It is, but just be aware, it's got into just a sideways move right now. If we get a pop back up, I would be looking for a potential move back up to 52 and or 55-ish. But as earnings approach, if you are flat the stock, I would consider either trimming back the position or just exiting if it basically is you have no gain in it whatsoever. Okay, this is one of the bio stocks, which has been doing pretty well lately. Got a nice bounce. And so, Gina, are you already long this? If you got in right here, you're in good shape. Where my cursor is on this bounce off the 50. But now you do have a breakout, so you've got a level of support here where it came down and tested today and is now rebounding away from that. As you can see, the volume the last couple of days has been kind of weak. And so that would be something to just keep your eye on. It may go on for a spurt move. So Gina, are you already long this position? Okay. But yeah, this was a good flag, bounce up, and it's already hit its first target, and it may push on up, recognize it'll run into a resistance zone at between 72 and it's high up here at about 76. So, okay, any other, okay, so you're just waiting to get into it and be patient. Cool. Oh, here's a couple of extra ones that I missed. Sorry, Judy. Bit to PLKI. Oh, Popeyes. Let's see, this is a kind of a low volume stock. But with that being said, pattern-wise, it popped up, has come back to retest the 50. And so if it breaks higher from here, like above the 60 level, that would be a potential entry. Or if it retests back down here at the 50 or, 59-ish would be a potential entry. And again, small volume stock. And so I would have to look at the stock checkup on it on IBD's web list. And so Gary makes ask a good question. Since I'm going to paraphrase it a little bit for you, Gary, is since the NASDAQ and the Russell and the S&P are now going in opposite directions, does that mean that the market is about to top? And the answer to that question is it depends. It is never a sign of strength when the markets are divergent from each other or when when it's a mixed market. And so it's always something that I keep my eye on. And we've had in all the time that I've been trading this past year, the number of times where we've had mixed market has been higher than any time I've ever seen before. And so I think that's one of the reasons why we're seeing these huge, divergences between the markets and also the huge, daily moves and also weekly moves, and why it's been a challenge to try to trade, to trend trade around it. Let's see, STI. That's a good sell signal. What we're working on today, it must have had earnings. Before market opened today, they weren't happy with the earnings. It has now dropped. This is a bearish engulfing pattern, of course. We're a significant bearish engulfing pattern because it's covered 1-2 days, and we're right back down at a past support level. You have to watch to see how this one turns. Judy, you have to watch to see how this one turns out at the end of the day. If it, in fact, closes back up here, I would think about taking some profits off if you're already long this stock, because right now that is not a positive sign. On a weekly chart, if it closed right there, that would be a shooting star, which is a bearish reversal signal. NTRS. Oops. NTRS. Okay, Northern Trust Corp. Northern Trust Corp has a box type pattern going on here where you've got support down here at 74. You've got resistance up here at 78, almost 79, which it's in fact turning back from now. If you are long this stock, depending on if you have profits in it or not, it has earnings report on the 22nd, which is next Wednesday before the market opens. And so depending on, if you've got a 10% cushion, you may want to let it ride, or you can take some of the profits off at that time. So Judy, are you long this already? What kind of, yeah, it's about a million share a day average stock. So it looks kind of interesting, but yeah, with earnings coming up on Wednesday, have some profits. Yeah, if the way I gauge that is as earnings approach, and you'll have to make the gauge on that close to 4%. Yeah, if it's not over 10%, you could think about potentially just pulling a little bit of the profits off that way, because nothing is any worse than having a profitable trade turn into a non-profitable trade at earnings time. And take a look at, see what it does in the past, and how does it tend to react on earnings. Here's a gap up on earnings here. What did it do the last time on earnings? Again, the gap up on earnings, previous to that, a little bit of a move up on earnings. So it's got a good track record on earnings, but that's not a guarantee that's exactly what's going to happen this time. So. Okay, folks, I think I've covered all the stocks we needed to cover. That is awesome. Keep your eyeball on the, again, see if we continue to get divergence in the between the indices. The Russell is still looking weak. The S&P is kind of just holding its own, and the NASDAQ is, still maintaining its gapped up position. So until next week, thank you very much, and we'll talk to you later.